Good afternoon, traders. This is Christian from Extravagant Trade Group, and this is your end of day market recap for Thursday, February 13th. Well, nice resolving to the upside, possibly getting us out of this range that we've been in for the last few weeks. And, that's basically something that I was talking about in the pre-market prep show this morning about, eventually the market will break a range. And price action was getting tighter and tighter, usually meaning that a big move is coming. So I will get to that. I'll talk a little bit about some of the moves, some of the economics this morning, some of the economics this week as well. But risk disclaimer in front of you, everything that we're going over in this video is for information purposes only. Please read the full risk disclaimer right there. But so let's talk about that really quickly. Let's start with the market economics, and then we'll talk about the price action. But PPI coming in 0.3 versus 0.3 yesterday. CPI coming in hotter than expected. The initial move yesterday off of CPI was a percentage down in the S&P, but the market kind of shook it off. So what could be going on there, right? With inflation coming in, hotter than expected in terms of the PPI did come up higher. I mean, one of the things that could be, and I'm only speculating here, is that perhaps that this market perhaps that the inflation data is maybe peaking out to some extent. It's too early to make that conclusion, but we are starting to see some things like the dollar sell-off, which also is kind of shaking off some of the tariff headlines, right? It seems like, when you turn on financial media or so forth, they're going to talk about that. They're going to talk about, geez, the impact of the tariffs and so forth. But eventually the market will get used to some of these headlines. It also comes into play too, whether these tariffs are just used as a bargaining chip rather than really inflicting pain. I kind of personally, I kind of think the former versus the latter. But again, time will tell, and we've got indicators to basically watch. Let me just talk about this just for a quick second with I wanted to talk about something to keep an eye on in terms of inflation. And again, we're not there yet in terms of seeing that move down, but we do know that some of this data that we're getting can be a little bit old and looking in their rearview mirror. This is something that I'm keeping an eye on. This is the TIPS ETF, so Treasury Inflected Protected Securities over IEF. Remember, you can't really look at one of these things in isolation because there's a big interest rate factor, right? All of these ETFs and different treasury securities are going to move with the prevalent rate and interest rates, right? But if you want to see the either like same thing when we look at high yield, right? We want to minimize the credit. We've got to look at it in terms of a spread over its closest to duration bond ETF. If you want to pinpoint, inflation, right, then you have to do the same thing and minimize the move in the interest rates by putting this over Treasury ETF, and you can minimize that. So notice that. So this again has not broken its trend or anything like this, but it did not. It has not gone higher and has not gone over those January peaks. So this is going to be a must watch for the next month or two to see if inflation is starting to peak out. But given the market reaction and kind of shaking things off, that could be one of the reasons why, if you're looking at some of the data and you see, oh, geez, this is higher than expected. Well, when are they taking a snapshot of the data? That's something to pay attention to too. While we're looking at Bloomberg, which again, I think these are some of the biggest things to kind of, besides the price action, which of course always rules, but taking a look at what the dollar futures are doing, right? We're going to bring this up in candlestick charts, but take a look at this. Since this made a peak in January, kind of the same thing what I was just showing with that Treasury in inflation protected securities over Treasuries, right? This peaked in January, and since then it made a lower high here. It made another high. This was another move up that we saw based on tariff headlines, and then we did not hold those gains, right? That was it was one of these candles in here. But notice this is moving back below the 50-day moving average, and it has actually closed lower than where it was, just a couple weeks ago. So to me, the dollar may be giving way here, and that's going to have a lot of different implications, right? At least we know that the dollar is not going up anymore. So when you've got that going on, there's a lot of implications. Another thing too, and I know some of this is a little bit boring, but I'm getting I want to make sure that we go over the macro first because I think that's interesting. But look at what happened with treasuries. Treasuries sold off hard. yesterday, and they actually they gapped back up. TLT was up 1.7% today. That's a much bigger move than we saw in yesterday's decrease. So whippy, sure, that's par for the course when we have economics, but bond yields are not going higher at this point. Prices going up here, not higher than where we were back in the beginning of February, but at least not moving. At least the price of bonds are not moving lower, which means that the long end of the curve, long-term interest rates are not going higher at this second. All right. So that's a little bit of macro review. Let's look at SPY, because yes, the price action was getting tighter and tighter and tighter here. Usually you're going to resolve yourself one way or another, maybe a false move on the low yesterday and a move back. So we closed right around the 609.76. That's the top of the value area. That is a significant level from based on last month's activity, right? This value area for February is based on all of the January price action as well as volume, right? So we're trying to break that range, and that's going to be very interesting. And notice where we closed, 609.76, very important. Also, when we look at the Qs, not quite as neat of a technical, triangle pattern, but this just resolved itself over the January highs, right? So this is actually new highs for the year. Just very quickly that happened in Qs, and the price action has been very tight here too. So this was the previous high. So again, that's a new high, not new all-time high, but new high for 2025. IWM, I think, is still kind of a mess. Maybe it manages to, now that maybe it's been putting people to sleep, maybe it can get back over the 50-day moving average, but that remains to be seen. And this is still heavy into the value area for the month, so more range bound than anything else. So where to start with the price action? I would say, first of all, one of the things that's been somewhat encouraging is just watching what's been happening with some of these earnings reports. Just a lot of gap ups that we're getting. AppLovin was one today. I mean, again, this is just incredible when you look back and see where the stock was trading about 6 months ago. Again, just about 6 months ago, not that far ago, the stock was trading under $100. This is up to $480. So just amazing. Upstart, another one. Now, Upstart did take out this upside VPOC, which was right here, right? And I'm not saying that these are easy trades. To see these things gap up like this on earnings, right, or making so much of their move on earnings is not exactly easy. But there was your Upstart. Again, knowing where there's overhead supply helps a lot. I want to talk about Tesla just for a second, right? Because this was a big mover to the downside. Speaking of Virgin point of control, I tweeted about this. I said I would be looking at this. I talked about it in the pre-market prep yesterday morning, but here was the VPOC takeout. It went further. Sometimes that happens, and then we kind of bounce back. But really nice movement here. And that's a good enough trade, I think, for now. I've taken a couple targets. I would be looking for I think that the top of the range, I'm not sure that happens tomorrow. And again, I think this is a good enough move, but 367 is something to watch there. In terms of price action, one of the things that I said this morning, it just looked like the market wanted to go higher. I went long TQQQ. I also went long some SPYs today. Again, I don't think you have to be picky. Once we break out of this range, right, which we're doing right now, again, I don't think that you have to be really picky and try to find the exact stock. Being that we're so bottled up here, you can make money just trading the indices here too. All right, so that's something to be said. Just a couple other things that I wanted to go over. Names that are making new highs. Look at CrowdStrike, has been super, super strong. Let's just bring up a few other names really quickly here on the highs list. A couple of names that I got involved in too today. I really like this IBM chart. A little bit of a pullback here, but this was a very strong name on earnings. I think this name continues higher. Snowflake hasn't reported earnings yet, but I know a lot of you look at this name. I got long this name today, again, just on the break out of the previous highs here. So just looking for some further price momentum outside of here and maybe a run into its earnings report. I want to talk about Apple too. They're going to announce a new product, and I'm going to give you a nice level to watch here, and that level's 241. 166. Another name that I haven't really talked too much about in these videos, but this is a smaller cap name, but has seen a lot of option activity. This was a really nice winner for me. I actually added back into here, and this thing ripped to new highs today. Was able to take a nice target in this as well. So I'm going to leave it there. I'm going to keep this video short and sweet, but there's a lot. What I really liked today was that there's a lot of participation. The last thing I'm going to talk about too, I'm going to come back to what I was talking about, the dollar, right? When the dollar goes lower, right? This is a very important concept. When the dollar goes lower, international ETFs are going to do pretty well. Unless the ETF specifically says that they hedge the currency risk, take a look at what's going on here in terms of some of your international ETFs. So EFA, which is international developed markets, so this is mainly Europe and Japan. Look at how this is breaking higher. We're going to look at these on the weekly chart too, because a lot of they gap a lot because the local securities trade overseas, and that's why there's the currency effect there too. So this trades in the US, it trades on a US exchange, but it's holding a basket of local shares. So as the dollar gets cheaper, automatically there's that currency effect there, and you're going to get the added kicker in terms of these things moving up. KWeb has been doing quite well. That's just looking at this. Remember, I said I would get long on the break of the value area. I did. I've been long the Chinese internet ETF. That's been working out quite nicely. But overall, when you look at emerging markets, look at what this is doing. All right, so this is the EM ETF just breaking the 2025 value area. And I like this, I like this for a catch-up trade at this point. When you look at if you look at the relationship with what's been going on here versus the S&P, since the beginning of this year, notice what's been happening, right? When everybody has been talking about how much the US has been outperforming every other place, lo and behold, what's been happening? EFA is actually outperforming, and I think do I have that here? I may not have that in the I should put this in here in the spreadsheet, but right now SPY's up, year to date is up 4%. Let's take a look at what these things are doing here. From a year to date perspective, you are now looking at 6%, 6.9%. So international is actually outperforming. Again, I know everybody's focused on tariff headlines and so forth, but the market seems to be shaking it off and doing so quite well. All right, guys, that's it for today's video. Have a great night. See you tomorrow.